Welcome to arguably the most important section in this entire course. This is the psychology section. I want to start off this psychology section first by talking about your equity curve. Your equity curve is your account capital on a chart. Your equity curve will go up and down as you make money and lose money. Your equity curve should be making an uptrend. At least that's the overall goal. You want it to be making higher highs and higher lows, meaning it is rising faster than it is falling. If your equity curve rises too fast or falls too fast, that's when emotions can really get to you. Most traders' equity curve look like this. Big up, big down. Big up, bigger down. And they end up making no progress or losing money in the end. Having an uptrend equity curve takes consistent trades that have bigger gains than they do losses. This is done by managing your risk. Consistency really only takes two things. First, a strategy that's been tested and works, which we will find a strategy for you later in the course. The second part is execution of the strategy. This all has to do with psychology. Most people only focus on the strategy that's been tested and works, which is important. But when they take this tested strategy to real money, it doesn't turn out the way that they planned. This is usually because they most likely failed on the execution of their plan. In this entire section, we'll talk about the psychology of trading and your emotions. After all, what's the point of a strategy if you can't execute effectively? You might be wondering, how hard could it be if you have a strategy that works and it's been tested? Well, the market is made to literally take your money. It is made to fool you emotionally. You are up against multi-billion-dollar companies and funds. These powerful stock market players are trying to make as much money off of you as possible. They don't care about you, and neither does the stock market. 9 out of 10 traders fail because of the mental game, not because their strategy was bad. Making a decision to take a trade or exit a trade or add to a trade can be very difficult, even with the perfect strategy. Because once you're in that trade, your emotions start moving and you start to not think so clearly. Remember how I said that markets move because of supply and demand? Well, that's true on paper. But psychologically, the markets move on fear and greed. If the market is fearful, then the bears are in control. And if the market is greedy, then the bulls are winning the battle. But then you also have a personal battle between fear and greed with each individual trade and with your equity curve. These emotions are what need to be tamed. Check out this diagram showing the emotions of a trader. This diagram could be used for each trader or for your equity curve. I'm going to relate it to your equity curve. First, you have optimism, excitement, and thrill as your account grows. Then it might seem like things are too good to be true. This is when a trader has euphoria. Euphoria is the most risky place for a trader to be, mentally, as you may feel like a hero or invincible. This can also be seen as being greedy. So you take on additional risk to make more money and enjoy more of the gains that you have been receiving. Then when a trade turns against you, or maybe a couple trades turn against you, your emotions start to fall to anxiety, and then denial of the losses, then fear, and then panicking, and eventually capitulation. Or in other words, your max pain for loss. So you take a hit. Here at the bottom is actually the safest place to be when entering trades, because mentally you have just taken a beating, so you don't want to take on the risk that you had been in the past. Then as your account grows again, the cycle repeats. And all these emotions you will feel as you trade. The goal is to manage them and not give into them or base any trades off of emotion. For example, you don't want to take on more risk just because you are feeling euphoria and just made an amazing profitable trade. Your money is your money. People often say, I'm playing with house money after they'd make a gain. In reality, that's still your money. Treating every trade as if you didn't make the last trade will help you keep your system and not make decisions based off emotion. This video is just an intro to psychology. I recommend you watch this entire section multiple times, and probably even after you have found a strategy, come back and watch this section again, especially once you start trading. So keep notes and let's tackle controlling your emotions. I'll see you in the next video.